Great. Let's get going. Happy Tuesday, everyone. It is July 5th. It is our first Cake DeFi Twitter space of the second half of the year. It is the first Twitter space of the third quarter of the year. The reason I'm mentioning this is because today we're going to reflect a bit on Q2 just from a very high level. That the company did. Cake DeFi, it's very early to reflect on that. Generally, we take about 2 to 3 weeks to kind of get all the data together and all the detailed reflection, and then we're going to do a special reflectionary kind of episode on that. But obviously, also we've had one of the toughest starts into a year when it comes to the general market, when it comes to crypto. We've had quite a crazy kind of first 6 months, and so we would love to reflect a bit on that. Look at a very interesting statistic for the rest of the year. And with that, that's going to be part of the episode. We're doing those Twitter spaces every week, every Tuesday, 6:30 here in Singapore, 12:30 in Europe, 6:30 a.m. East Coast time. And if you haven't done so already, please follow us on Twitter, where we're doing those live at Cake DeFi, or follow us on podcast. Then you can listen to the recording also on YouTube. Amazing. With that, let's dive in. Fabio, welcome. How are you feeling? How's the community feeling? What's the general sentiment at the moment?
Hey, everybody. It's boring. It's super boring. There's just not a lot happening. So usually in community management, there is a lot happening when price is doing something. So if we're pumping or if we're dumping, people, of course, like to voice their excitement or their frustration. But lately, we're just going sideways. So and it's also so we have a large customer base in Europe, and currently it's summer in Europe. Maybe this has an effect on this as well. But there is a general disinterest in everything that is going on. People are just, I guess, sitting it out. Maybe we can. We made some predictions last week regarding the ETFs, and I think we did well on that, didn't we?
Yeah, I think we were spot on. Maybe you want to summarize it, and then we can reflect a bit on that.
Yeah. So if you missed last Twitter space, Julian shared some amazing alpha. So things like that you will not get in any other place. It was a really fun Twitter space, and we talked mainly about the two ETFs, Bitwise and Grayscale, which both of them got rejected by the SEC. I think Grayscale already countersued or sued. I'm not actually sure on the terminology there. So they're not. They think it was not a valid rejection, but of course the SEC has the last saying. But both Julian and me, we kind of anticipated that both ETFs would be rejected, and also it is probably not a bad thing that the rejection that they got rejected, especially the Grayscale one, because of the large 30% discount. If you want to know what the alpha trading idea regarding this discount is, make sure to listen to last week's Twitter space. It's available here on Twitter, on YouTube, on Spotify, or on Apple Podcast. It's definitely an episode worth listening to. But yeah, we both of them got rejected, so I guess we need to wait until the new deadline approaches. I think normally this is about 180 days or so. No, I'm actually not sure on this.
No, I don't think there's any new deadline right now from everything that I understand about that. Again, this is definitely not my expertise, but as far as I understand this, the change, so it's a change request actually always, right? So this change request was rejected, and so now the funds would have to file for a new change request. And I'm not sure. I don't think Bitwise filed for another one, and Grayscale, as far as I know, didn't file for a new one. They just are suing the SEC right now, because I would assume that they understand that the underlying facts are not changing unless a regulated Bitcoin exchange would pop up in the US, spot exchange, then the underlying facts would change. But other than that, I don't think the underlying facts would change. But that's my understanding. Definitely, some of you understand this a bit better. One thing I do understand quite well, though, is how did the price react to that? Some people kind of interpreted that afterwards the price dipped under 20,000 and they were like, oh, that's because of the ETF rejection. I mean, it could definitely have been part of the ETF rejection, but to be very frank, I mentioned this, or Fabio and I discussed this last time. The market had expected that, the smart money had expected that. So that dip under was very unlikely to come from the ETF rejection. It was way more likely because actually the general markets dipped during that time as well. And so, yeah, I think this was way more of a coincidence than a strong kind of causation. So, yeah, just kind of wanted to address that a bit. Yeah, maybe what else before we go on to a few other things? Sorry, Fabio, you unmuted.
Yeah, the only other thing I can think about, and maybe there is some irony in this, but there were some news on. So we had, of course, the whole pre-Arrow Capital incident within the crypto space, but now it's also banks that are affected. And who would have guessed? Peter Schiff and his bank paused all
What
withdrawals.
what actually happened there? I didn't fully follow that because I really didn't like have the time, but I just saw that's Peter Schiff posting something. I was like, what's going on?
So I'm not the most knowledgeable person there, and but Peter Schiff is pointing some fingers. So I guess they had some issues with liquidity, and then he wanted to bring in another company where he's like a 4% stakeholders, and these are also like friends, and then the regulatory oversights in Puerto Rico, where he I think is based with his specific fund. They kind of said, no, we're not going to do that because I don't know, you are a 4% stakeholder, so you cannot, I don't know, make some kind of takeover where you're involved yourself. But I'm not very knowledgeable on this. But Peter Schiff has a few tweets where he addressed this issue personally, and then of course you have all the crypto people and Bitcoin people jumping on this like it is a free cake.
Okay. I didn't follow that much, but yeah, quite interesting. What I did want to share, maybe three things cake related. Q2, one thing I definitely know, we had a cash flow positive quarter, which is quite impressive to consider that we as a company are still profitable, considering how crazy the market has been. I also want to admit one thing here. At the moment, it's razor sharp. So if prices stay at that level or dip a bit lower, we may have a slightly cash flow negative quarter in Q3. That's going to depend a bit on the price, obviously, if it goes up. But that being said, our entire treasury, if crypto would basically get like kicked down another 80% from here, we would easily have 4 years of runway. So yeah, this razor thin kind of loss that I would be forecasting for Q3 based on current prices. So I cannot predict. So I, as a CEO, have to make models based on what we have at the moment. I cannot kind of predict something worse, predict something better. I just have to work with what we have. So I'm predicting like a super small kind of loss for Q3, but that's totally negligible because we could run the company basically for like 30 years with that tiny loss. So just want to be super transparent for you here so that you know we have a very sustained business. And I mean, most of you can kind of do the analysis yourself. We have the transparency page up, so you can really completely transparently kind of track and trace how much money there is on the platform, how much money we may be making from that, and then kind of do your own extrapolation on how much it's going to cost us to have around 120, 130 people run the marketing. Then yeah, you can kind of do the math yourself without us doing any public statements on P&Ls and so on. But I made this mention some time ago, and I just want to remind everyone during bear markets, during recessions, everything becomes easier except for fundraising. Always remember that. So the reason why this is so important is one very key statement I always love to make. While the average person hates booms and busts. They love the booms, obviously, but then they hate the busts. I think professionals, doesn't matter if it's investors, traders, business people, and so on, they actually love the booms and busts because during the booms, it's very easy to kind of expand. It's very costly to expand, though, but kind of everything that you do kind of pays dividends. It's so easy to kind of grow. However, obviously, you spend quite a lot of money. And so the really professional investors, the good businesses, they understand that everything moves in cycles, and they kind of prepare for the downtime. And then during the downtime, this is when it weeds out all the shitty companies. And we have seen this over the past 2 months in a very powerful manner. And so that's when the shitty companies get weeded out and the great companies kind of stay. And now everything becomes easier. Suddenly, marketing becomes so much cheaper. We have hardly had so low customer acquisition costs as we've had in June. I mean, this is just nuts. The how cheap it is at the moment for us to acquire customers. The only difficult part is to actually scale that cost right now, because it's just difficult to kind of attract more and more people during this time into the crypto space. So you have to really work with what's here because a lot of customers, a lot of potential customers who are not in the crypto space yet during these times have a very hard time entering the crypto space. But people who are in the crypto space, they are very open to find cash flow solutions. They find very open to find transparency. They're very open to finding companies who are doing a good job. So that's where this low customer acquisition cost is coming from. And yeah, and we had a growth of about 50% of our user base. So that's impressive at the numbers that we're growing at. And the size, I mean, obviously you're growing from 100 people to 150 people. It's not impressive. But if you grow from hundreds of thousands of millions of customers and grow by 50%, that is quite impressive, especially during this quarter. So for us, Q3, it's going to be a very interesting quarter. I'm quite hopeful. I'm hopeful that obviously the good kind of gets separated from the bad. There's also a bit here in Singapore with the regulation. You may have heard this, where there was a misquote from the MAS chief here, who was misquoted that Singapore's regulator is going to kind of kick out all the crypto and it's going to make it very hard for crypto. But this is actually just an abbreviated quote and is actually misquoted. The actual quote is that MAS here, which is the Monetary Authority of Singapore, so you can see it almost like the SEC in the US, is really going after those bad projects, and they want to make it hard for these bad crypto projects to be settled in Singapore. And yeah, there were a couple of interviews that I was giving both to German-speaking media, to international media, where I highlighted how I actually appreciate that, because many times you have so many companies kind of settled in Singapore. They're not even in Singapore, right? It's very different to Cake DeFi, where the majority of our workforce is in Singapore. The company's in Singapore. I live in Singapore. My co-founders, u-zyn, is Singaporean. So it's yeah, very, very different how most of these other companies operate. And so they kind of just borrow the strong brand Singapore has, but they're actually operating out of somewhere totally different. And that's yeah. In the end, now I really like that direction, and obviously I hope this it goes into a positive direction. So yeah, that's, I think, quite good in all of that. And then one last thing, and then I want to see if I missed anything on the Cake updates or community updates before we maybe talk a bit about what could be upcoming in third quarter, H2 on the markets in general. There is a DeFi chain voting proposal going on. If you have 20,000 DFI frozen on Cake, so you have a full masternode on DeFi chain, please participate in the votes. We have quite a lot of proposals, so go through those proposals. And tomorrow, Wednesday at 3 p.m. Singapore time, so that's 9 a.m. in Europe, we're going to have a bit of a sneak peek into DeFi chain, what's happening, what would the people kind of, what are people concerned with at the moment. So we're just gonna have a bit of an idea brainstorm, or just kind of a discussion and debate. So if you're interested about DeFi chain, then join tomorrow 3 p.m. Twitter space on the DeFi chain channel. So these are a bit of the updates I just want to give right now. Obviously, maybe two things. So multi-chain, something we've discussed a couple of times, basically having a lot of different chains being onboarded on Cake. A lot of that simply got a bit pushed around and a bit delayed around with some of the disturbances we've seen over the past couple of weeks with the entire market and everything kind of going a bit left and right. But this is gonna come out soon. And then the same, what we call earn, which is a very streamlined version for you to get some very, very nice returns on Bitcoin and ETH and stable coins and so on. That's going to be quite powerful and super transparent. So you're going to love that. So stay tuned for that. Yeah, these were a bit of the updates on the cake side of things. Fabio, anything I missed there? Anything the community wants to know, or anything you feel I should add or you should add?
Yeah, one thing regarding the voting. So DeFi Chain opened their voting tonight, 0000 UTC. On Cake, we always need a little bit of time. As soon as the voting is open, we kind of need to assess and to adjust our freezer page. So if you're a customer and you have 20,000 DFI or more, meaning a full masternode, this will be visible on the freezer page. It is not right now, but as soon as it is, you will receive an email from us with a little guide in there where all the steps you need to take, and you will find all the signatures you need for voting on the freezer page itself. We implemented a copy to clipboard function, and we made the whole thing a little bit more user friendly, a little bit more viewable. And as Julian said, please exercise your right to vote. It's an important voting cycle, a big one. And then on the other news, we briefly touched on that last Twitter space. We kind of teased our transparency page. So this is cakedefi.com/transparency. Please note that this is the first draft. This is not the finished version. We are very, very open to community feedback. The first draft is live right now. You can have a small overview of all the masternode addresses, collateral addresses, transparency reports, and so on. But it's not a finished product yet. We are hoping that you guys are going to engage with us either on Telegram or on Twitter. If you have any feedback, anything you want to see there, then please reach out to us. We welcome feedback of all kinds, of course, as long as this is constructive. Then I don't know, maybe you did talk a little bit about, I would call that external or user growth. Maybe we also had a lot of things that are happening internally. We got a lot of exceptional talent in. Maybe we can also briefly touch on that.
Sure. What do you want to share there? I'll leave this up to you. I mean, I think we always
I
hire
think
some really exceptional people.
yes.
But yeah, I maybe you have someone or some people in mind.
Yeah, for me, of course, Julian mentioned this already a while back in a Twitter space. The company is at a point where it is super hard. Like in my first 18 months at the company, I would probably say it's fair to say that I knew 90% of the people. Maybe, or I made the effort to know everybody. Right now, it's just a little bit practically impossible. Like we get so many new people in, and even if you make the effort to reach out to every single one of them, it's so hard to keep track. I think our senior hire, he shared this week or so. I think this year we got 63 new people in. So we're halfway into the year. So this is like 2 point something a week. So every single week there's two new joiners, a little bit more, 2 or 3, which is crazy. But at least for me, I can already feel the impact that certain people have. Like I can do a shout out. I don't know if he's actually listening. I hope. But YZ, he came in and he is managing a lot of the product, and oh my God, he's so great. The way he approaches this, the way he gathers feedback and structures everything. Yeah, I absolutely love that he is taking over the whole product side.
Yeah, oh, for sure. One thing that I do see though is quite interesting. We had a bit of a rotation of people. I mean, some rotation was because people moved or like physically moved. Some people moved away from Singapore or moved from somewhere to somewhere. I do feel a bit of a rotation though of interest in general, where people, and I mean, you're actually part of that cohort as well, but I haven't seen any kind of change in your interest. I think that's because you've been in the crypto space for a bit longer. We had a bit of a strong hiring spree during the Q2 2020. That's actually the kind of same time that you actually joined the company. And I do feel a bit of a change in sentiment from that time. But I do believe a lot of it actually has to do with that some people from that time, they get disappointed right now that the crypto market went down. I kind of gave this talk once during town hall where I talked about, yeah, that tourists are going to be leaving, and those that really are not the tourists, those that are going to stay, those are the ones who are going to profit. And I kind of encouraged team members, and it's actually maybe really surprising, where I then told people, like, you should actually be leaving the company if you get discouraged by that crypto price down, and you should probably go into another kind of industry, because it may actually get harder and more difficult. And if you joined in the past because crypto was so hypey and you were so cool that you were part of crypto, and now suddenly no one wants to talk to you anymore because you are in crypto, then you are in the wrong company. And I'm very vocal about culture. I think people know that. I completely buy into what Jesse does at Kraken or what Brian does at Coinbase, who are also very protective about their culture. I'm exactly the same. So for me, it's like, hey, u-zyn and I, we set that culture. It's our company. I own pretty much half of it. u-zyn owns pretty much half of it. So yeah, this is not a democracy here. This is a meritocracy, and the culture that we're setting is the right merit. And so you like crypto, then yeah, that's the right company for you. And you don't, then hey, join a business where you enjoy that. I saw that rotation a bit over the past couple of weeks. I don't know how you experienced that. I do think it has had a bit to do with, yeah, the kind of uptrend, downtrend. I don't know how you experienced that.
I think tourism or tourist is a really good word for it, and it's both. You have both people in working inside the crypto space that they're like, okay, they came maybe from, I don't know, a Grab or Shopify or for something that was hot a few years ago, and like a little bit, you could say, like a grasshopper, they hop on into the next big industry where everybody's talking about. So they are kind of tourists, and they are not here. Let's say in crypto we say we come from the gains and we stay for the revolution. So they're not here for the revolution. They are more here for the hype or for the gain. And you see this both with retail. So people that are probably listening to this space right now, or people that just buy because the price is up. And the thing that you mentioned, it's really like I spent a little bit of time during the weekend, and I saw a few friends that I haven't seen for a while. And the last time I saw them was end of last year. And when you told somebody that you're working in crypto, that you're working for a company that is doing Bitcoin things, then back then this was the super hot talking point. Everybody wanted to know, oh, what should I buy? And the prices are up and so interesting. And what do you do? And if you bring this up right now, then most of the people say, oh, yeah, it dumped quite a lot. Is it ever coming back? And it's not looking good. And it's not really a hot talking point. People don't really want to engage in that conversation. Yeah, that's, I guess, the thing that changed the most for me, or that's what I noticed during last weekends.
Yeah, one other point, and I think we've pointed this out a couple of times. So I think about 90% of our team members take their salary in Bitcoin. So the way this works is all salaries are measured in the local fiat currency where these people live. We have to do that because otherwise either the company or the employee take an unnecessary risk because of volatility. So imagine you're being paid, let's say, 5,000 US dollars a month. Then this every month gets converted into Bitcoin. And so I want people to take their salary, or I want people to be measured in fiat, but then be paid in Bitcoin. And the reason is super simple. I feel this is all about culture. It's all about kind of being native to that field. It's to me the same as if you work at Tesla and you drive a fuel car, I think there's something wrong with you. If you work for Apple and you own an Android phone, I feel there's something wrong with you. And so you may just not live and breathe what you're actually preaching, right? And so this was more of a recommendation to the company, and about 80 to 90% of our team members are actually did take their salary in Bitcoin. And yeah, now we're going to make this mandatory. So I'm expecting, actually, I'm expecting from that remainder of 10, 20% that didn't take their salary in Bitcoin. Again, I'm expecting a few people to drop out. I can't remember exactly now what months we gave them a little bit of a couple of months of kind of trickle over so that you don't have to do it from one day to another. And I want to highlight here one thing, right? All our team members that this rule applies to live in countries where we also have customers from, right? So there shouldn't be any actually excuse to that. And so Yeah, to me, I just want to highlight if you are an business owner listening to this, or someone that really has to kind of lead an organization, you can also do this within your team. Like, trust me on one thing, like down times, down markets, recessions, bear markets are the best time to really double down on what you truly believe in. It's really gonna pay massive dividends in the long term. I'm absolutely religious about that. And so, yeah, I don't know how often I sit down with u-zyn and we kind of really kind of go through our team principles, uh, our what we stand for, and yeah, also, for example, we're gonna really kind of want to rework the entire app. We want to rework the entire user experience. I think it's a great time to do that right now. Over time, it was just all about adding and adding and adding. When many times you actually have to like make stuff simpler by removing or just kind of making that path easier. And so, I mean, that's not going to happen from one day to another, but at the end, that's just going to make the user experience better. And it's always about doubling down on what you truly believe in, and on that one single point of focus. So, and never be scared at the end as a customer or as an employer or as an employee. Never be scared of making it crystal clear on who you want, who you're looking for. If you're in marketing, you always notice like you always want to think about your avatar. You always want to think about that ideal customer. And of course, like you will always kind of stray from that ideal customer. Of course, you will always stray from that ideal team member. That's absolutely good, right? You want to have some diversity of opinion. That's so important, right? You want to have some diversity of an approach to a certain problem, of course. But like the thing I would never want is I would never want to have a team member on that says, "Oh yeah, crypto. I'm not sure. I don't believe in that. And hey, you should still hire me because you're all about diversity." Then I'm like, heck no. Like I want diversity of opinion on like how we approach our problems, but I really am like super religious about the kind of like team principles and about kind of the things you value when it comes to crypto and so on. So yeah, just a bit of a maybe an encouragement also if you're listening as an entrepreneur, as a business owner, how important that actually is. Um, yeah, with that, I don't know. Let's reflect a bit on Q2, H1, H2. So when I say Q, it's second quarter. When I talk about H, it's first half of the year. Or did I miss anything, Fabio? Otherwise, I would kind of reflect on that a bit going forward.
Yeah, let's go into reflection. Maybe should I start?
Yeah, please.
Okay, now for me, it was such a turbulent year, and I cannot believe that we are more than halfway in, because it felt like two blinks of an eye. I remember we started the year, of course, everybody was expecting the six figures Bitcoin in December, didn't happen. I remember that December and January was not super bearish. There was still a lot of hope in the market, and the real sell off came a bit later. But we started off with some turbulence. We had some regulatory requirements because, of course, cake was growing insanely during the whole year 2021. And so it started off quite hectic. During the time, I remember during New Year's and into January, it was a pretty heavy start of the year. And we had the D tokens on Cake just launched like 30 days earlier, I think somewhere end November, begin of December. I'm not sure. And there was a lot of educational work that to be done because this was sort of a first in the industry. There were some other projects, I think, that did something similar, but not in that extent. That integrated like real DeFi products into a CeFi platform. I think this was maybe probably a little bit industry first. So a lot of education that needs to be done. And after that, so Julian mentioned this, we have these sprints where we push out new products and where we really go for something. And this was mainly D tokens and borrow functionality on Cake. So you can take out a loan and collateralized loan. And these things, of course, led to some other issues. Like we had so many things that happened at the same time. So the company was scaling. We implemented a few new key features, SD tokens, borrow, a reward dashboard, and so on. And we were a little bit fast with the implementations and also scaling at the same time. So if some of you guys may or may not remember, but we had a period of a few weeks where the website stability really suffered. Just because we got so many new people in and we had this reward dashboard that was just fetching so much data at one point that the website stability suffered. And we kind of took that reward dashboard away. We're still bringing it back, but we want to do this the right way. So these were, I guess, in my opinion, at least from like a product standpoint or the things that were talked about in the community, these were the biggest things for me. Hopefully I didn't miss a big one, but I think these 3 or 4 affected me the biggest.
No, I love that. And I mean, if we then look at Q2 more from a market perspective, obviously, I mean, all of that kind of played in. Q1 kind of still held it together this year. Crypto, and people like, if I would just ask you, Fabio, maybe just from the top of your head, what is the feeling? How was Q1 of this year? Just as a gut feeling, like, I don't know if
Pretty
like
bullish
without,
actually. We had to
yeah,
back then. Luna was a bullish thing. They in
yeah.
Q1 at least. Yeah.
Totally. I mean, it was, and actually Q1 was quite neutral. Like actually looking at beginning until the end, it was because December, January was relatively negative, and then February, March was a bit of a recovery. But it was really kind of April, May that was kind of double-digit negatives in Bitcoin, and then obviously June, which was this entire month of true slaughtering. I think close to minus 40% Bitcoin in June. And so obviously alts really suffered even more on that. So we had this 3 months kind of streak now in Bitcoin. Obviously, a lot of it came from the general markets. S&P is down over 20% the entire year. And so that was kind of the entire driver. Then we had the dominoes kind of falling, and one domino led to the next domino. And so that was, quite obviously significant. And at the end, Q2 turned into a negative 57% for Bitcoin, which is one of the most bearish quarters that Bitcoin ever had in a very, very long time. I think only in 2011 or something, but I'm not sure how relevant those numbers are. I once, a good friend of mine who is running a very popular, it's not the main fund, but it's a subsidiary of a fund that everyone would know here on the show. And he's running let's say the Southeast Asia division of that fund. It's a venture fund. And he always told me that for him, crypto or Bitcoin became publicly traded in 2017. So for him, he always kind of says that anything until, I think for him, it was always 2011 is like super like early stage in Bitcoin. Then 2012 to like 2016, that's like late stage. So some people actually got into this, but then publicly traded for him, Bitcoin was 2017. And so he says his firm kind of estimates that like 90 to 95% of all people that are in crypto today actually came in 2017 and later. So any kind of number that you take from 2016 and early, I'm not sure how kind of comparable that is to today when the markets are very different. I just kind of felt he probably wasn't so wrong with that guesstimation. And so you really have to go back far. Just as a obviously quick comparison, I think from the top now, Bitcoin is about down minus 70% at the moment. Just for reference, I think 2018 we dropped by about 80%. So if we went into that same kind of region, we would have another 10%. So another going from the top about $7,000 down if we kind of match that cycle. So just kind of stating that, my opinion on astrology that a lot of people in crypto kind of love. I'm not that big of a fan of that, but I just want to point this out in case this matters for you. The interesting one I actually want to talk about is a bit more general markets, just because in case we don't see any kind of crypto or like unexpected crypto blowups, maybe large exchanges that are totally insolvent, something that SBF has kind of hinted to. But let's say we don't see that right now, and they can kind of wing it over into the next bull market and they don't become insolvent until that point. Then I think the crypto market will strongly trend with other risk on markets, especially stocks. If you look at the S&P 500 at the moment, just from a gut feeling, maybe Fabio, give me a general gut feeling. How much do you think the S&P 500 is down right now in comparison to the COVID crash of 2020? Just from a gut feeling, like are we down more than the
66.
Okay,
Probably, I
so
don't know, down
about two
20,
thirds
and
of that.
back then we
Yeah.
were back down 33 or so. So yeah,
Yeah, man, you
just
know
an
your numbers.
estimation.
Yeah, spot on. Spot on. Yeah, spot on. In comparison to the dot-com bubble, do you think COVID crash was a stronger crash than the dot-com bubble or less of a crash?
Definitely less of a crash. I think .com was more than 60%.
Yep, you are spot on. And then what about the financial crisis? So 2008?
It's but between 50 and 60, I'm not sure.
Even more. So it was really like at the moment the S&P is down about 25%. COVID was a bit over 30%. .com was about 50%. And then during the financial crisis, we were down almost 60%. So just for some reference, yeah, we are not even halfway down from what 2008 happened. So I just want to put that into a bit into perspective. Also, maybe a couple of other numbers. Stocks, obviously, we have seen the drawdown now for, yeah, let's say a couple of months, right? 4 or 5 months. Just to give you a bit of a kind of feeling during financial crisis, dot-com crisis, right? This entire drawdown took years, years. I gave this, we did this one session, is quite some time ago now, I think a month ago, where I kind of did a bit of a history kind of outlook all the way back to like 1909 1907, where we really talked about like first crises in the like 120 years ago. But just like to put some perspective there, right? People tend to believe that drawdowns just take weeks or months, and then we have the bottom, and then we pump again. So just be extra careful there. Yeah, and if like record obviously has been that entire crash back then that took over the Second World War, that took decades, literally decades. So yeah, if you invest into something and you believe that we will always see higher markets, we will always see kind of a bull market. Yeah, I think odds are very good. The question is just always on based on what time horizon. So yeah, that's kind of a bit of the review here. Fabio, do you any things to add or things to mention?
Yeah, maybe if some fun numbers. And we like I was participating in a lecture in I think when was that, in May or so, or in April, where a German economist, he said, if you think that stock valuations are super high, you're probably a bit wrong, because there is certain islands or certain areas where stocks are massively overvalued, like with a PE ratio of 25 or 30, or some of them even higher. But you have other areas where stocks are actually in a very normal price range. So if you look at the United States, for example, the United States accounts for approximately 4% of global population. They have 20% of global GDP, but they make up 60% of the total stock market valuation. So when you just look at the United States, there are still some areas where stocks are massively overvalued. But if you look, for example, here in Europe, there is a lot of companies that are trading at a very low price to earnings ratios, and where it might be, of course, or Europe in general is not looking that great, because we kind of hinder innovation in every way we can. We just saw that with the new unhosted wallet regulation that came up, but there are some gems that you can find on the beach, I would say. But in general, yeah, there's especially I think in US stock markets, there could be a lot more downside.
Yeah, the exceptions, basically two exceptions, market-wise that you mentioned. One is Russia. I'm not sure I mentioned this on the podcast here in the past. Had a good friend of mine, very wealthy, very well-known friend in Singapore. I would assume most of you know him because he's a lot in the news. He's very famous and outspoken about very, yeah, odd kind of bets to make. And I do want to admit he's super critical of crypto, but that's fine. I'm okay with that. I don't have to listen to him about crypto. I can listen to him about other things. He kind of tried to encourage me, yeah, a couple of months ago to invest into Russia. I never did that though. I always struggled with that idea, but Russia has done, yeah, very well. To some people, quite surprising. To some other people, very expected. The other market has been China. Yeah, China has been doing surprisingly well also, especially with the zero COVID policy that they seem to be kind of easing on now. But yeah, that's kind of the exception. And then if you then go and look at kind of other investments, there's not much left. You have a little bit of commodities, but commodities have gone down now, have come down dramatically over the past weeks, especially. Oil is pretty much the only one that can still hold on. But you look at metals, you look at industry metals, you look at a lot of commodities, they've also come down now. And yeah, the dollar is kind of the huge winner. Even the Swiss franc that normally in such times is kind of the escape route has given a little bit at least of some weight to the dollar. The euro is pretty much at a 20-year low versus the dollar. Is absolutely shocking. And yeah, that's quite interesting to see a bit. In all of 2022, the M2 supply in the US of the US dollar hasn't changed. It stayed at zero. It's the first in a very long time it did that. And yeah, quite interesting to see then how quickly the world goes to chaos when that happens. So yeah, always a bit of a shocker, to be honest. Yeah. Fabio.
Maybe I want to touch on something that I got a few DMs on this, and I just want to bring this up because I get a lot of DMs where people ask me why do we not shill certain cryptos like Bitcoin or Ethereum or DFI a lot more? Why we don't use the opportunity in these Twitter spaces or in general to shill this to people? And let me just let me just touch on one thing. So we kind of have a very unique opportunity that we have a very high rate of financial literacy amongst our customers. And this is, of course, because Julian does a lot of education on his personal YouTube channel since years and has a lot of insights into this market. And his community is also, there's some overlap with the cake community. And also because it's so much better as a company if you have people that have a high rate of financial literacy, because when you get people, so if we would just chill, like go all in into Ethereum, go all in into Bitcoin, and best to leverage your house on top of that. So why do we not do that? Why don't we recommend people to take leverage, and why don't we recommend for people to go all in? We kind of take even a step back and we say, hey, look that your personal finances in order before you take the step and go investing. And it's so much better as a company if you have these kinds of customers, because especially in times like right now, there is not a huge fund outflow because people need to recollateralize their loans, or they get liquidated, or they have no personal finance and they need to sell their investments. If you have a high financial literacy rate amongst your customers, it brings a lot more stability in, and it's better for the customers, and it's also better for us as a company. And so maybe this is the reason why we are not blatantly shilling you to over expose yourself. Just my 2 cents. Maybe Julian, you have something to add there.
Dude, I really love that you say that because I get this a lot as well. When people are like, dude, you're the CEO of a crypto company and you make a video on YouTube where you sell like a significant chunk of Bitcoin in October 2021. And people are like, why are you doing this? You're hurting your own business. And I'm like, you may be right that I'm hurting my own business on the short term, but you know what? I'm definitely not going to hurt my business in the long term because people know that I'm like, this is me, right? I don't care. I am just as transparent as I can be. I tell people when I like something, when I don't like something. I don't have to virtue signal. Really, I don't have to. And to some people, that's pissing them off because they would love me to do this. The good thing is I really don't have to. And the people we attract, and we do this with the entire company, it's the same with our employees. I mean, that's exactly what I just did before. You want to attract the right kinds of people. Our funded accounts, right? Funded accounts. We are by far at an all-time high with our funded accounts. Who else can say this, right? Just think about this. And this, I know why this is. Now, of course, I know that the dollar amounts are down, but the people that we have, they understand the long-term vision there. To me, this always reminds me a bit on when Elon Musk goes out and says, look, he absolutely wants the world to go to or to move towards sustainable energy. But then at the same time, he says, we need more oil at the moment and we need to drive oil. We need to drive that business, that oil industry. We need to actually support it right now because otherwise we're lacking energy because we cannot be quick enough in actually going to sustainable energy. And to me, that's exactly that same thing. Now, of course, people criticize him for that and say, dude, you're kind of like talking against your own book. No, I don't think so. I think he's totally talking his book because it makes sense. You know what I mean? And so at the end, sure, you can always fool people for a certain period of time, but that's not going to happen for a very long time. And afterwards, they just like they don't want to deal with you anymore. And so that's why I'm totally against like those people that are always like buy more, buy more, buy more, buy more. No, that's absolutely stupid. Like you should have a very healthy balance of the assets that you buy. And I personally don't own all my assets in crypto. And why should I tell you to do so? I would love for you to put your assets that you have in crypto in a healthy mix on Cake DeFi and another healthy mix in a cold storage. I think this would be a very smart decision. And that's exactly what I'm doing as well. I don't have all my funds on Cake, but I have significant funds on Cake. And it's my own company, and it's always the same. And why do I not have all my funds on Cake? Very simple, because I do believe that Bitcoin is digital censorship resistant gold. And there's this quote, and people know this. I was interviewed, I can't remember which outlet interviewed me on this, where I said, I don't want anyone to know how many Bitcoins I own, because who knows, maybe in the next 10 years the world really goes to shit, and all the crypto companies would really kind of get censored down and would have to reveal all the data. Again, we're going to fight till the very last day at Cake to reveal anyone's data. Trust me on that. But who knows, right? I mean, I also want to be very clear. If all our team members suddenly are faced with prison sentence, or you reveal our customers' data, look, the decision gets very easy. So I just want to be very clear on that, right? I'm going to fight till the very last moment. Uh, that's why I have my stash of Bitcoin that I don't want anyone to know about on cold storage, and you should too. And the part that you don't have in cold storage, where you're investing for numbers to go up, or where you're investing for long-term kind of gains, hey, nothing is better than getting cash flow on those. And so, yeah, I'm just as transparent as I can be on that, because I believe in the long term this is going to really pay off. So yeah, thanks for kind of pointing it out. I made this very interesting Twitter kind of poll. I just want to kind of pull this up. And the Twitter poll was, why do you think people invest in Bitcoin? Do you think it's actually utility? So like either payments or digital gold, or do you think it's just numbers going up, NGU? So that's basically speculation. And so I was kind of giving this mix of, do you invest in utility, but others invest into numbers going up? Or do you invest in utility and others investing in utilities? Or do you invest in numbers going up, others investing in numbers going up? You numbers go up, others in utility. So basically, it's a variant of the question, do you think that you are an above average driver, right? And so if you ask like the general population if they are an above average driver, more than 50% believe they are above average, which obviously mathematically is not possible, because exactly 50% would be around an average driver, right? So in kind of percentages. And so suddenly everyone believes that they are above average. And so, of course, right, just for the numbers here, over 82%, right? 82% believe that others invest into numbers going up. Imagine this, over 82%. Now, still, if you then add how many people actually think that they are not part of that, it's almost 50%. So in this case, way over 40%, close to 50% of the people actually think that they invest into utility. But then still, over 80% actually believe that the others are only in it for the quick gains. So what does this kind of mean? It just means that you have very likely a very wrong perception of yourself and or of others. And in my opinion, in this case, we just all have a bit of a wrong perception ourselves, where we always believe we do the right thing and everyone else does the wrong thing. And again, I'm not excluding myself in this. I actually also believe that I probably kind of judge myself in being way too rational or way too long-term focused, way too utility focused, when it's actually just making money. I don't know if you have some thoughts on that, Fabio.
Yeah, maybe what we all suffer from. So we are all hypocrites, and we all suffer from cognitive biases. And maybe to illustrate this a little bit, if you work for a traditional big media player and you write an article on, I don't know, Tesla or on Netflix, you're required to tell the audience if you hold an asset or not. So if you're a Tesla shareholder, if you're an investor and you're writing an article on Tesla, both the audience, it's appreciated if you disclose that you actually hold this, because you suffer from a cognitive bias. You have a skin in the game. You are incentivized to have a certain viewpoint. Now, where it is funny and what most people actually don't consider is, for example, if you're an economist or if you are a public person like, for example, Peter Schiff, and you kind of wrote an article or went out publicly in 2011 when Bitcoin was at $1, and you dismissed it and you said, hey, this is not going to end well. This is a bubble. This is a Ponzi. This is technically not feasible. You are also suffering from a cognitive bias because you hold an opportunity cost. Peter Schiff holds the biggest bag of opportunity costs probably in the whole crypto space, because if he would have invested $1,000 in 2011, which he had opportunity, he had contact with Max Kaiser. Max Kaiser even gifted Bitcoin to him. But he practically holds an opportunity cost back of multiple millions, probably 15 million, 20 million, even if he invested a low amount. If he would have invested a decent amount, he's holding an opportunity cost back of billions on his back, and he needs to carry that around every single day, which also results in a cognitive bias. So they go both ways. And we here on crypto Twitter, we are in such an echo chamber where everybody has different incentives. Everybody holds something and says something because of a reason. Even if they don't hold an asset like Noel Rubini or Peter Schiff, that's maybe on different perceptions.
Yeah, I love that. Why don't we finish a bit with some kind of maybe a bit of a sneak peek on what to expect in the next weeks, months, quarters, general markets. I give you a couple of my ideas. Then Fabio, we can see a bit on what do other people predict or expect, and then we just see this. So obviously, very key. The only financial advice I'm giving you is always to keep your emotions out of any investment decision. Everything else, man, I probably have as little clue as anyone out there. So don't listen to this for financial advice. This is purely information. I try to produce data, not opinions. So I try to kind of separate the data from the opinions. So just want to give you a couple of things here. So first data point, I think over the past months, a lot of the decision making from people was around the Fed. I think we can all agree on that to a strong extent. Fed this week, tomorrow, Wednesday, is going to come out at 8 p.m. local time, US. So that's going to be our Thursday morning in Singapore, 8 a.m. With the Fed meeting protocol. So that's going to be quite relevant to kind of understand what is the Fed seeing at the moment. Do they see any wiggle room around adjusting their interest rates based on inflation expectation? Are they willing to kind of go a bit softer, seeing how strong the market has sold off? To be frank here, the market is betting on a 0.75% increase at the end of July, 0.5 in September, 0.25 and 0.25 in November, December, respectively. So they definitely been front-loading the interest rates, and that obviously that's the market pricing in right now. Anything that would be a bit more aggressive in these minutes tomorrow could lead to a bit of a downturn. If these minutes are kind of highlighting that they may be a bit softer, this could actually lead to an kind of upturn in the market. Now, here's the very interesting statistic, and it's a really, really crazy statistic, but the data points are also relatively weak. But the statistic is really strong. It's just that it's difficult to kind of say that how predictive this statistic is. So whenever you look at when the S&P 500 has been falling by more than 15% in the first half of a year, whenever this happened in the first half of the year, so 15% or more, so 15%, you have 100% success rate in the past with the market being positive in the second half of the year. This happened, and we're kind of going backwards here, 1970, 1962, 1940, 1939, 1932. So obviously 1970, I mean, this was a very, very crazy time in the market, high inflation, you remember this, 1940, 1939, I think not much of a surprise, Second World War leading up to that. So you can now sit there and say, well, fair enough, but I mean, that's 50 years ago, that's like 80 years ago, who cares? Like, different time, this time is different. Something to consider in all of that is why I actually, and this is my purely, that's now a pure personal opinion, right? Again, the other stuff is fact, personal opinion. I actually could foresee this for the next 6 months. And I mentioned this a couple of times. We do have midterm elections. Midterm election years tend to be relatively strong in during the time of the midterm elections because the kind of party in power, in this case, the Democrats, obviously would love to see a positive market because at that point it kind of makes it a bit easier for them to win the midterms. So that generally is going for the markets. Then we have the statistic also at the moment everyone is super, super negative, right? It's super, super, super like, I don't know, if there's still, if what would have to happen right now for stuff to become more bearish? I don't know. I would really kind of say almost that we would have to go into a full-blown war, right? We would really have to go into a Russia versus NATO. We would really have to go into a China versus US kind of war. I don't know if I don't know if COVID bubbling up again would have any significant impact. It would really have to go into like a massive kind of setback, right? So I don't know what really would have to happen there. Again, I'm expecting the July, August kind of earning numbers for Q2 and most companies to be abysmal. Earning expectations to be abysmal. PE ratios are going to shoot up dramatically because the earnings are going to drop so much. So, but this is priced in. Most like don't like I like some of you you don't have the experience in the market. I'm not saying I have the experience in the market. Don't get me wrong here. But from all the smart money that I'm talking to, people where I know they've been in this for decades, right? If you remember tweets that I made in September, October, where I was like, all the smart money I'm talking to tells me sell. All the people that have been in this for the past couple of months and years, they're like, oh, we're gonna go to the moon, right? Someone is gonna get really wrong over the next 6 months. And me selling Bitcoin in October, I kind of it's not so much about my words; it's more about my actions, and my actions kind of predicted a bit on who did I think was going to be wrong over the next 6 months. And so, kind of looking at all of that, what a lot of the smart money is expecting right now, and it's expecting abysmal earnings. But if it is expecting this already, it may have a small impact on the market, but it may actually not be so bad because, yeah, retail may get a bit shocked, but probably smart money is expecting this. So, from everything that's super bad already, I don't know what would actually have to happen to make it worse, right? And you can actually like tweet at us, right? It would be interesting to kind of understand what do you think could make it worse, right? And again, I don't know that much that could make it worse. However, a lot of things and this doesn't have to be much, could make it better, right? The Fed not being so bearish could make it better. Like Ukraine tensions easing up could make it better. Inflation numbers not being 8, 9%, but maybe just being 6%, right? Just being 6% would make it better. So a lot of things would easily kind of make it better. And the market is extremely oversold, both in crypto and general markets. And at the moment, I would not expect these two to break apart, right? I would expect them to trade in tandem. So I do actually think there's a fairly good chance that this statistic, and again, this is purely personal opinion, zero financial advice. I may be completely wrong. If you trade on this, you may lose it all. So don't trade on that information. Make up your own mind, right? That's very, very important. And again, opinions don't matter, results do. Opinions don't matter. The way you got to the opinion, it matters. That's the same as predictions are worthless, predicting is priceless, right? It's the exact same process I'm kind of demonstrating at the moment. And so that is why I actually believe we may have a good chance that we're going to see this year in the second half to end higher than where we are right now. So I just want to be very clear that statistic says that we would end higher than where we are right now. So Bitcoin ending at more than 20,000, the stock market ending at higher where we are right now, the various indices. And I think there's a very solid chance for this to happen. Now, there's a very strong flip side that I want to make, and that is that looming Damocles sword that we have, and that is housing. So housing is one of the most like delayed kind of markets ever, right? So liquid markets, public markets, liquid markets, marketable equity, whatever you call it, move super quickly. Crypto moves super quickly. Then you have late stage PE. We have seen those valuations getting crushed. We have the early stage valuations getting crushed. And now housing, right? if the housing market starts crumbling, that is then basically what would actually lead us down that sad rabbit hole when we're going to hit those like 2008 kind of drawdowns. And so that is that big fear that I have, that actually I haven't mentioned, that I see kind of getting really, really bad. And so I'm definitely not a real estate expert. I sold all my real estate last year. I don't own, I think I still own 2 apartments, but that's very, very minor in the entire portfolio. And that's just because of the interest rate kind of fear. And I don't know. I don't know how, again, I have no clue about the future. So for me, these are just things that I always see. And I just want to share my thoughts on this. This would be the kind of bearish thing. If this happens this year, then forget the statistic. If this happens next year, we may see a bit of a recovery in H2. And then we're going to see this really sad kind of downturn next year. If real estate never crumbles, this may have actually been it. This may have been the bottom. Be very careful. So that's always a bit of the warning on this. Be very careful if you're doing these all in, all out decisions, because many times they're very emotional, and then you kind of get positioned on the wrong edge. You're gonna buy just because the market's rallying, and then you buy too late, and then when the market's crumbling, you're still in, and then you kind of always buy high, sell low, which is super disastrous. So interesting statistic. Let's reflect on it at the end of the year. Yeah, these are a bit of my thoughts, what's coming up. And yeah, one thing I want to kind of highlight here, and let's see what Fabio adds from a community side, or if there's anything to add. For us, for Cake, again, if there is a bear market right now, and that bear market lasts for 1.5 years, or for 2 years, or for 3 years, we're ready. We're like so ready, trust me. And we're going to come out as a really strong winner. If we unexpectedly now turn around today and bam, we're gonna rise, and it's gonna be super bullish. We are ready. We have everything there, rubber ready to meet the road. So that's the kind of winning formula, I think, at the moment. Be happy with any kind of decision at the moment. So just wanted to share a bit of the data there. Personal opinion. Don't take this as financial advice. Fabio, anything you want to add here at the end?
Okay, let me finish off with throwing two bombs into the room. I really appreciate that you brought up housing, because it's a big topic for me right now. I'm in my mid-30s. I want to buy a house at one point, but the prices are insane at the moment, almost worldwide. So if you look, I looked at 2 or 3 things that kind of surprised me. One thing is in 2021 and also this year, is we are at an all-time high in new houses built. And this is a trend. The all-time high was broken. The last time we had it was in 71, where we had kind of a different, kind of a similar setup regarding inflation. And not only that, but if you look in the United States at new mortgage applications, they are down 80% month over month. So nobody knows if this is just a singularity and the trend will change, but there is some data that indicates that housing could be something to have an eye on. And the other thing is, so 13th of July, this is within 10 days, we have CPI numbers coming out, and this is a date that I'm personally watching very, very closely, because Julian already hinted on this, but if inflation peaked, so if we are seeing a lower CPI than, I think, 8.6%, that would indicate that inflation peaked. The Fed is not going to immediately change their course, because they want to see 1 or 2 more data points before they would. But if inflation would peak, this would probably be a sign for the market to be a little bit more risk on. And Julian and me, in these Twitter spaces, we hinted a lot that there could be a relief rally at the end of the summer. I still think the chances of this are fairly likely to happen. We have the FOMC meeting coming up 26, 27 of July, which Julian already indicated that probably a 75 basis point hike would be what we will see. And the last thing, end of this month, we have the US Q2 GDP data coming in. And this is also a date to be watched very carefully, because if we have a negative GDP growth in the United States, we are in a technical recession. What that means, I'm not 100% sure if the market would react to that, but these are a little bit the things to keep an eye on over the next 30 days or so. And with that, I leave the last words to you. Thanks everybody for tuning in.
No, thanks so much, Fabio. Thanks for all the value nugget. Thanks so much for tuning in. If you are already a customer on our platform, cakedefi.com, well, welcome. Thanks so much for being a loyal customer. If you're not, what are you waiting for? Full transparency on your cash flow. And if you're looking for your next opportunity to work for an amazing company, then go to cakedefi.com/jobs. And yeah, we may be a good fit. With that, stay safe, stay healthy, have a beautiful Tuesday. Hope to hear you next Tuesday. No, sorry, quick announcement. Next Tuesday, there's no Twitter space. Sorry, we have to skip 1 week, and then we're back the week after. So next week, no Twitter space. So hear you in 2 weeks. Otherwise, tomorrow, if you're interested on the DeFi chain Twitter space, see you there. Thank you so much. All the best. Bye-bye.